I think we hit six figures. I do these 10 surprises every year, and one of mine was, that we hit six figures. We definitely take out the all-time high.
Mm,
That could happen in days, right?
sure.
Once people realize that these ETFs are taking out more Bitcoin out of the market than is mined every day, and after the halving, it's going to be two or three times
Mm,
that. So it's just a supply demand problem. So we're having a demand shock right now, and we're going to have a supply shock in April. We're going to go from 900 Bitcoin a day to 450. You put those two things together, number go up.
mm,
And then we haven't even talked about the FOMO part and the leverage part and the
yeah.
stupid part where dumb people play dumb games and win dumb prizes.
The launch of spot Bitcoin ETFs has sparked diverse opinions among both crypto investors and detractors. Some have labeled it a failure, citing price declines as evidence. For instance, prominent gold advocate Peter Schiff, who has shifted his focus to Bitcoin since the ETF's launch, expressed surprise at Bitcoin's price remaining above $39,000, anticipating a more chaotic decline. Additionally, The Economist highlighted that the ETFs aren't generating new demand but merely redistributing it from the underlying asset. Despite Schiff's persistent criticism, he demonstrates a limited understanding of Bitcoin's mechanics, as evidenced by his oversimplified explanation of its value proposition. However, amidst the criticism, Bitcoin's resilience shines through. Despite initial fluctuations, Bitcoin's price recovered, reaching $42,000. Despite the initial skepticism, the success of the venture is evident. Even staunch critics like Schiff may eventually acknowledge this success in the weeks and months ahead. In a recent interview, renowned investor and hedge fund manager Mark Yusko shared his bullish outlook for Bitcoin in 2024. He believes that the Bitcoin ETFs have triggered a substantial demand shock, which, coupled with the impending halving event in April, will propel Bitcoin's price to new heights. Yusko predicts that Bitcoin will easily surpass its previous all-time high of $69,000 and reach six figures before the end of the cycle.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
People are talking about it in different ways. There's people saying, oh, it was a total failure. I'm like, what are you talking about? I mean, we set all-time records for ETF trading on the first day. When you put together the basket, it was $4.6 billion of trading in the first day. Like, oh, but there was only a few hundred million of net inflows because GBTC was being liquidated. I'm like, sure. I mean, did people expect on day one all the advisors out there would say, oh, I made a mistake. Clearly, I should rush out and load up. No, it's going to take time for education. All the advertisements are going to come. You're going to have, you go to blackrock.com.
Yeah.
Their landing page, their main landing page for the whole firm is an ad or the one pager for IBIT, their Bitcoin ETF. So that's a big deal. That's a really big deal. And so here we are 4 days into trading, and we've got $1 billion of net new money into IBIT. We've got $2.5 billion of capital across what they call them the newborn nine. And then, GBTC converted. And yes, it's losing assets because they kept their fees really, really high, knowing that the people who had a big tax gain aren't going to sell over fees. So it's kind of a little bit of a cash grab because they've got some challenges, I think, over at DCG. But bottom line, I think it was a tremendous launch, tremendous day for digital assets broadly. There's all the maxis are upset because, these people don't own Bitcoin. You're right. Technically, you're right. The Bitcoin was created so you and I or anyone else could exchange value without an intermediary. So no, these people are not going to hold their keys and they're not going to put it in cold storage. But here's the thing. There's going to be a transition from TradFi, traditional finance with trusted third parties, to ultimately DeFi or NoFi, right? Where there's no trusted third parties. This is going to take time. But this is a great stepping stone for people to add what has been, the best performing asset over the last decade. It's actually been the best performing asset 12 of the 15 years it's been in existence. Most people have zero exposure. Not people listen to the podcast, but most people have zero. And, I've been talking about this since 2017, 18, right? Get off zero. Zero is the wrong number. Now, I'm not saying 100% or 90% or 80%, but zero is just wrong.
Yeah.
And you want to have some of this asset in your portfolio for lots of different reasons. For the low correlation to other assets, it protects your portfolio. For the fact that it is a store of value against devaluation of the currency. That was the big one for me. When Larry Fink, right, who's the head of the largest asset manager on the planet, BlackRock, who 6 years ago said this was an index of money laundering. Bitcoin was an index of money laundering. For him to then come on CNBC and say, no, it's a store of value that you should own to protect yourself against the devaluation of the currency.
Describing it as surprising to hear BlackRock's CEO caution investors about currency devaluation would be an understatement. It was nothing short of shocking. The impact was magnified when he not only issued the warning but also advised investors to turn to crypto as a hedge against devaluation and a means to preserve their wealth. Larry Fink made this profoundly bullish statement in July, approximately 3 weeks after his firm applied to offer a spot Bitcoin ETF. During interviews, he underscored Bitcoin's status as digital gold and an international asset capable of shielding investors from inflation and currency devaluation. A couple of months later, Fink doubled down, characterizing crypto as a flight to quality, an endorsement few anticipated from a traditional finance titan whose interests are deeply entrenched in the established, often opaque financial system. Mark highlighted a compelling observation about currency devaluation during the interview. He pointed out that the United States national debt had ballooned by $1 trillion in just 3 months, soaring from $33 trillion in September to $34 trillion by the end of that timeframe. This stark escalation, Mark noted, contrasts sharply with history. It took nearly 2 centuries to accumulate the first trillion-dollar debt, now achieved in mere months. Extrapolating this trend, he foresees a future where such increments occur within weeks, if not days. Returning to the interview, Mark delves deeper into Bitcoin's significance, particularly in comparison to other assets like gold.
I think this is the year, 2024, I think, is the year where people finally understand that Bitcoin is digital gold, right? I mean, gold is this amazing asset. It's an asset that is money, right? It's actually one of only 2 or 3 monies in the world. Money is an asset that exists in the absence of a liability. Everything else that we think of as money, dollars, yen, euros, are not money. They're currency. Currency is backed by debt. And money has to exist with no associated liability. And it has to be given value, ascribed value by use and custom. Okay. And I love that there was a video years ago of a guy selling yak meat, like back in ancient times. And this guy walks up with a chicken and gives him the chicken and gives him the yak meat. And then a guy walks up and gives him gold. He's like, the hell is that? Well, it's gold. So what do I want that for? I can't eat it. I can't use it. I mean, I can't sell it. He says, just trust me. It's going to catch on. And the idea that a piece of shiny yellow rock would be the thing that we all for 5,000 years would use to ascribe value. Well, the reason is because of scarcity, right? The stock to flow ratio, the amount of new production relative to what's used or lost or stolen is roughly equal. So the stock, okay, the amount to flow is very high, which means your scarcity value is very high. Well, Bitcoin actually just passed gold in terms of the stock to flow, the amount that's created every year versus what's lost or stolen. Okay. And that stock to flow ratio means that it's very scarce. Well, scarcity is one element. You also need something to be portable. Gold actually isn't really that portable. And the real problem with gold is it's not very divisible. Like if I had a bar right here, right now, and I wanted to break it in half, and I think I'm pretty in shape guy, but not really, but I'm not strong, right? I could not break that bar of gold, even if I were super strong, right? Even if I were Arnold, right? And I could, even he couldn't do it. I couldn't stuff it into my computer and send it to you. Well, I can hit a couple buttons and send you Bitcoin, like instantaneously.
Mm-hmm.
And I could do it to 100,000 units, Satoshis, 100 million units per Bitcoin. And this is, I feel sorry for Samantha. She's a very nice lady, Samantha Dulac, and she basically just misspoke, right? And said, well, I don't understand. It's Satoshis. That just means it could be infinitely divisible and create infinitely more. It's like, you mean if you take a pizza, you can cut it into infinite pieces and feed the world? Really? Is that what you're saying? There's still one pizza. But Satoshis are just a devising unit that allow us to not have to think in full Bitcoin at $50,000, but right, in terms of pennies or Satoshis. So ultimately, we'll get to that point, and there's lots and lots and lots of Satoshis, 2.1 quadrillion, which is why my hashtag on my Twitter handle says 2.1 quadrillion. But that's where we're headed, and divisibility, portability, and this idea that triple entry accounting is just better. It's a better system.
We'd love to hear your thoughts on Yusko's outlook and price predictions. Share your comments below. Meanwhile, the U.S. Securities and Exchange Commission has postponed its decision on 2 spot Ethereum ETF applications. On Wednesday, the Commission announced the delay of BlackRock's iShares Ethereum Trust, filed last November, and also Grayscale's Ethereum Trust, which, if approved, will transition into a spot Ethereum ETF. The SEC has set March 10, 2024, as the deadline for a decision on these ETFs. Interested parties are encouraged to provide comments on the proposed rule change. This delay sets the stage for another potential legal battle, reminiscent of the Grayscale versus SEC lawsuit. Despite SEC Chair Gary Gensler's recent warnings that spot Bitcoin ETF approvals will likely be limited to a single cryptocurrency, the question remains, will the SEC be compelled to approve spot Ethereum ETFs? Share your insights and observations in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.